Amisha Vora, Joint MD at Prabhudas Lilladher, also joins in this discussion. Amisha, good morning. Thanks so much for joining in. There is enough and more happening in the markets, Amisha. I mean, people might talk about valuations, about India's underperformance over the last 1 month compared to other EMs, but there is buying almost every single day, and expensive stocks are being taken higher as well. What has been your take at Prabhudas Lilladher to your top clients?
We think that, the flow of money definitely will continue, but there could be, since it is more technical driven and the recovery underlying in the economy is still panning out gradually, but it is definitely panning out. The markets from here on could be a little more volatile, but we still continue to remain overall pretty optimistic on a medium-term basis, where with little volatility on the way, people can still make money.
Right. Yes. You want to market stock? Maybe. Yeah, Multi-Bay is, Amisha, just stay on. Tanveer has a question, but just want to mark Multi-Bay is, it's a 276 rupee stock, but there is going to be a delisting. They've announced the delisting. Multi-Bay, as I said, the parent holds about 75% stake in the Indian arm. Coincidence, but just a day ago, the Rane Group spoke in droves about the kind of opportunity that exists for airbag manufacturers in the country. Multi-Bay is in the same bracket, albeit not as large, but an interesting space to be in. And now we hear, or we get this news that there is an open offer at 245 rupees. Needless to say, I mean, I may be wrong out here, but just from the looks of it, with the current market price at 276 and a delisting announced, I don't know how successful such an open offer will be. Nevertheless, the promoter, the parent essentially, holding 75% stake, has announced a decision or an intention to go out and delist. But surprising, at 245, I don't think it will have some takers.
No, that's true. To acquire about 31 lakh shares of the Indian arm. That's a piece of news that we have. And the stock, of course, would see a reaction. It was up 4% yesterday. Maybe it had a whiff of this announcement coming through, and there was perhaps some excitement ahead of the announcement on the open offer price. But Amisha, just this morning, while we are debating that, on account of the big story with the SBI merger ratio out, that SBI would largely remain neutral because most brokerages believe that it's a fair merger ratio. My only question is for the associate banks, and especially for, State Bank of Mysore, where the rally was, I think, from this year's perspective, to the tune of 50%. I mean, there was so much anticipated pent-up interest in these names ahead of the merger process taking off. Do you think that they would be in for some correction?
I think based on the merger ratio, one of the banks, subsidiary banks, has a small 6 to 8% downside. But otherwise, most of them seems to have factored in the merger ratio more or less correctly. So we don't think, except one, there will be many major downside. But also coming back to SBI, not that merger is the key reason for us to be positive. We've been positive on the stock, and I would just like to emphasize that we continue to remain pretty positive on the stock even from current levels. And we think that the recovery, which is gradually starting in the economy, and beyond all, the technology initiatives of the SBI, as well as the way their asset quality is looking to us and the bifurcation of their portfolio, we continue to maintain that amongst PSU, this will be amongst the best bet to go for.
Okay. Piramal Enterprises. Misha, I'll take my chances with this one. Do you track Piramal Enterprises?
No, we don't.
As a house, which is the last recommendation you've come out with? New recommendation.
It's not a new recommendation, but some of these stocks which have re-entered in our top picks, they include, one is Glenmark. Glenmark, we think that it is on the cusp of a very good rally. And not only we think that the US will give them a good growth, and some of the products that they have should bring in good recovery, I mean good growth in their US business. But the main fact, we think that from FY17 onwards, they should start generating very respectable free cash, and that's where we think the key turnaround will come. Because in last 1.5 years, the kind of rounds of dilution or fundraising that they've gone through have kept investors a lot more, investors have been not quite comfortable with that. I think that round will be over and the company will start generating free cash. That should be very positive for the stock.
For that, Amisha, comment on the entire NBFC space. Now, we tend to treat the entire NBFC space as one homogeneous basket, but every NBFC is different, the model is different, the market is different, and the market capitalization is different.
Yes, it is different because few are very focused property related, few are housing, few are straight consumer, and the risk diversity of each of them is so different in terms of impacting their credit costs, I think, and the growth outlook. That's how the whole space is, gives us a lot of diversity to choose amongst. But there remains one fact that at starting the leader at say 5 times book, going down right till 2.5 times books, to me it appears that this space is priced to perfection, though the growth momentum will continue, but the appreciation here on will be very limited. I would rather, focus on another such space, not within the financials, but, as a pack of companies within auto ancillary segment. I think that a number of companies within this segment, if you have started showing very good numbers. Some of the large players like Bharat Forge and Motherson are still facing issue because a large part of their turnover is facing the global markets. But if you see some of the domestic focused ancillaries, they have started showing good growth and good margins also. And I think that along with domestic recovery, their numbers should be pretty sustainable. So that space looks very interesting to me.